Nation, Mark Hawaiian Trader here. Alright, wow. This is crazy, right? I mean, look at this. So this is last week. Well, one, two, three, 4, 5, 6, 7, yeah, week and a half. 9 trading days ago. I mean, I was hoping we get this nice down move, almost a 2 standard deviation move within a day. The next day, hit that 2 standard deviation line, and it it didn't go all the way down. This is just crazy. And IV rank spiked up to about as high as what? 25 on the ES futures, the SPY futures. Okay, but watch, look at the SPY. All right, here we go. Same time frame. Look how high IV rank got as high as almost 50, not quite, but it got up there. And look how fast it basically shot. IV rank shot up from, look at that, 3.24 right around here to 42 in one day. Okay, and there was some follow through the next day, but see what's interesting is the next day the market dropped, but IV rank still collapsed. That's how you kind of knew, but I ain't gonna lie, I was hoping it would still continue to go down. But lo and behold, look what happened after. IV rank plummeted. Don't get me wrong, I don't want to complain, because the trades, your golden geckos would be making money and whatnot, and all my coaching clients are making money. It's just, we're just hoping to make more. Because as IV rank rises, we can sell these options for more money. Right, and then that's what I cover a lot in detail with the private coaching program. Let me talk about this real quick. Why? I get this question a lot. Why do I lose money every time I buy options? And that's what everyone kind of gets started off with, and I'm no different. Well, let's take a look, all right? And this is why I love the Tastyworks platform. Okay, so let's say, you're thought, oh, this is what everyone's taught. Okay, well, let's buy an option. I think the SPY, look, this market is so strong. Let's just buy a call option. Here's why you lose money. Let's go to option, and we're going to buy a call, long call, right? And so you go, well, I don't know, I think the market's going to go up. All right, fine. What do you think it'll go? What do you think it'll be high as and when? Oh man, well, let's say at the end of June, I think the market will be higher. Okay, so at the end of June, so towards the end of June. All right, so let's change this. And where do you think it's going to be? Well, it'll be up at least another, I don't know. It'll be above what? I mean, a lot of people don't even see. That's another thing. They don't even know. They just know it'll be higher. Okay, so let's just say you think it's going to be higher than it is now. In what? 19 days from now? 2 weeks? Sure. I was okay, great. So you can buy a call. It's trading at 241.71 right now. You could buy a call that would at 241.50. Okay. What people don't know is when you buy a call, not only do you have to be at least two things have to happen for you to make money. So at least 2 things have to happen when you buy a call. So let me show you my little cheat sheet I give to my members. If you want this, subscribe first, let me know, and I'll give you my cheat sheet for vertical spreads. So let's say you're bullish, so you buy a call. That's called a debit call. You can do a spread as well, but you need the stock to go higher, right? And you also need IV rank to climb higher, all right, for you to make any money. So look what happens here. So let's say in this example, okay, take a look. You have to pay $1.85 for this to buy this call, right? So that means for you to make any money, see the green area? Okay, first of all, to break even, you have to pay. Well, one, you're paying for this. So for you to even make any money, even a penny, the stock price has to go from $241.50 plus the $1.85 you pay for it. So when you click on this thing here in Tastyworks, it'll tell you, sure, and here's how you get suckered in. Here's what all the trading coaches will say. Oh, look how much money you can make. I mean, imagine if SPY keeps on going higher and higher, your profit is unlimited. But what they don't tell you is, for you to make any money, it has to get higher than 243.34. Okay, well, where is it at now? 241.71. And what are you betting? You're betting it'll be higher than 241.50, which is even below here. See that? So you have to pay for that. Your chances of being right is about 38%. Okay, now the problem also is when stocks go up, volatility goes down. You need volatility to go up so you can make money on your call option. So the problem is here. Take a look at this, and I'll zoom out. I'll just go auto zoom out. Here's SPY. Don't you? And I'll switch studies here. And again, if you want my study set, subscribe below, and I will give it to you for free. Let's load IV rank only. Here. Check this out. And I'll go like this, auto arrange. This is 1 year, right? Look what happens as the stock is going down. Look what happens to IV rank. IV rank goes higher. Implied volatility goes higher. When the stock price goes up, well, look what happens to volatility. It goes down. Well, that's the opposite of you want. You want, okay, you want the stock price to go higher and you want volatility to go higher. That's not usually what happens. And this is why I get, oh man, Mark, I get all these questions. Mark, thank you for signing up for it. I'm glad I signed up for your coaching, because before I was day trading and then I tried options. Everybody told me, yeah, it's really easy. Just do vertical call debit spreads or just buy calls or whatnot, and use the charts and you can catch on the trend and I'll make money. And they always ask me, well, why couldn't I have done it? Why didn't that work? Well, the math is against you. Okay, so then he goes, yeah, but Mark, all you got to do then is don't sell it down here. Sell it, buy it down here. Okay, so do that. So let's say, look, SPY is at 241.71, right? So let's bet it'll be above 240. Okay, that means we're already making money, right? Because we're below stock. The price is here for the stock, and we're betting it'll be above this at the end of whatever 20 days. Well, now sure, right? It says like you're out of the game, but no, you're not, because you have to pay for it. You have to pay $2.92 for it. So you take this, add the $2.92 for you to even break even. The stock price has to hit $242.92 before you can even start to make money. It has to go a penny above that before you even make a penny. Okay? And it has to stay above that by the end of 19 days. And volatility has to climb. All right? So it has to not just go up above 240, it has to go up above what you paid for it. And that's why, it's so hard to make money. And so, well, Mark, why don't you just go lower until this gets higher? Well, look, I'll go to let's go to 230. Oh no, let's go to all the way down here. 236. All right. Now you have a 45% chance of being right. But look how much you got to pay. See, again, it comes out to the same, right? You're gonna have to wait to get to 242.35 right there to break even. And by the way, that's why I love this Tastyworks platform. If you want it, there's a link at the bottom of our website. You can get Tastyworks for free. Just click on that link and go for it and get it. All right, so this is why people lose money buying options, right? Now, what if you do the opposite? Now, look, if you're buying this and you have a 45% chance of being right, right, who do you think you're buying it from? And the person you're buying it from, if you have a 45% chance of being right, what is that other party's chance of being right? Okay, so let's take a look. That's would be the opposite of the, or the same would be selling a put. Instead of buying a call, you'd be selling a put. Okay, and we said 19 days, right? Okay, perfect. Now let's just scroll back to where we were over here. Look, 236, right? I'm gonna go back. I think I can bring it. Yeah, look, 236 call, right? 45% chance of being right. Let's go back to what I was doing. I'm selling the 236 put. What that means is I'm betting that the stock market at the end of 19 days will be above $236, right? I have an 87% chance of being right, right? And here's the best part. If you do this, you can make money three ways. If the stock stays at the exact same price, you make money. If the stock goes higher, you make money. If the stock even goes, the stock can drop in price all the way down here and you still make money. This is how the basis of foundation is your step one, grasping this concept, and then you can learn to make a lot more consistent money from there. So I wanted to just kind of do this as a recap for people who have never seen my YouTube channel or whatever, just to give you an idea of why you lose money trading options, because you're usually doing the wrong way and you were taught the wrong thing. Feel free to subscribe, check out the videos. If you want personal private coaching, there's a link to that as well. Have a great Memorial Day.